Namaskar and a very good morning. Welcome to the audio cast from Kotak Securities. I'm your host and guide, Anindya Bannerjee. आज focus of the market will be two things. First, it is the euro. Yes, euro is just 20-25 pips away from the glory, and the glory is the parity. ये जो parity है, that is 1:1 to the USD. This has been the dream of a euro bear for the last good 14 years. जब से ये global financial crisis हुआ था अमेरिका में, that's in 2008. Since then there has been a talk that euro will head to parity. Then it was the eurozone crisis of 2010 to 2012 and etc. Various other issues. Every time the euro dipped towards 110, 115, there was a talk this time it will make it to 1.1, but it didn't. It turned around and made a big move on the upside. But this time it is very close, just 20-25 pips. That's nothing for such a liquid market, the euro dollar, which trades trillions of dollars every day. Now, why is this parity important? It's important because if you are trading the EuroINR, it's going to be important because if euro dollar falls very sharply, EuroINR will fall too. So you can make money by shorting the EuroINR. But there is a bigger picture to it. The bigger picture is that if the euro starts to fall very sharply below parity, मतलब ये 1.1 के नीचे अगर ये ट्रेड करता रहा और नीचे, तो we think that there could be a knee-jerk reaction across emerging markets. Already today, the Chinese currency is depreciating quite rapidly. So keep an eye, because this is more of also a psychological level, a kind of a novelty in the market. So a deep cut below parity can trigger a sharp depreciation across emerging market currencies, because the emerging market space is fragile now. Outflows have been constantly happening for months together. और उसमें Indian rupee is definitely at risk. So RBI has to be exceptionally active, and the way the offshore market met dollar rupee is well behaving, we suspect that RBI could be already active in the offshore market through various channels. So the RBI intervention has to be there at a rapid clip, because outflows are happening. Speculators will jump to short the rupee because forward premium is low or futures premium is low, so the cost of shorting rupee is quite low. So considering all these things, RBI has to be has to stand like a rock to prevent a sharp depreciation of the rupee, because dollar rupee is at an all-time high. So it can make a sharp swing on the upside. Now अगर हम लोग ऑप्शन पोजीशनिंग देखते हैं तो 79.50 कॉल पे there is a heavy open interest which is at a clear risk of being squeezed, और उसके बाद 80 का कॉल. 80 का कॉल is still some distance out. As long as RBI is defending it aggressively, 80 call can breathe a sigh of relief. But in case RBI lets this loose just a bit, 80 can be under pressure. So keep that in mind. Now, how to trade? It's going to be a buy on dips. Now there are a couple of ways to trade this thing. एक है कि you may not get a dip like yesterday. So what you can do for fresh position, you can use a call spread. क्योंकि अगर ये dip भी आया, let's say during the day of a massive RBI intervention, whatever, उस dip में you are not there's a high probability that you will not get stopped out unless that dip is phenomenal, because you have a lot of cushion with the call spread. और वो dip जब अगर आता है, then that will be an opportunity when you can go long futures, because what we have seen अभी तक कि dollar rupee में if anybody buys on a sharp dip, futures or let's say a naked call, it has a higher probability of turning it out to be in the profit than somebody trying to buy at any price. So keep that in mind. So right now, if you are going fresh long, use call spreads. If there is a sharp dip in the market, then you can use futures or naked calls to enter additional longs in the trade. But the bias is clear, it is upward. and we have been advocating not to sell options for the last few weeks, and that call has turned out to be quite well. So again, if somebody still wants to sell options, ensure that your strategies are not naked. For example, a short straddle or a short strangle is a naked strategy. Rather, a hedged strategy would be a butterfly or an iron fly or iron condor. So whenever you design any short options strategy to collect the premium, our advice is design it in a way that you don't have unlimited risk. At least try to cover your upside risk. So you may keep your downside risk open because the trend is up, but at least cover your upside risk so that you can buy an out of money call to hedge the unlimited risk on the upside. So keep that in mind. That's our advice for option sellers. In the crosses, obviously, fireworks will be in all three, but the center of the attraction will be the euro, because parity, it's going to make a lot of headlines once that breaks. And generally what happens is that ये जो parity के नीचे there could be a lot of exotic option positions which may get activated. So that can create a huge volatility. So EuroINR will be absolutely the center of attraction, followed by GBP/INR and JPY/INR. All three could be under pressure provided dollar rupee is not blasting upwards, because dollar rupee suddenly takes off 60-70 paisa, then every other currency will be pulled. But if that's not the case, if just 20-25 paisa up move, then EuroINR, GBP/INR and JPY/INR will be under pressure. But keep an eye once again on EuroINR. So that's it, folks. This is Anindya Bannerjee signing off. A fantastic day ahead.